Lithium carbonate prices continue to rise this year, having almost doubled since late 2020. The ASX's top lithium miners are up 200% for the year. We're going to be looking at the best lithium miners on the ASX this month. This is Final Market Points, where we're connecting the leading market themes and top companies for better trading. You can like this video to support the channel and subscribe for updates. And to understand why these ASX lithium miners have continued to rise so much, we need to understand what's the underlying market doing, being the underlying commodity of lithium carbonate that is used in batteries. Now, the prices peaked in late 2017 and then came an inevitable bust as producers, lured by the higher prices, flooded the market. By the end of last year, 2020, prices were down by about 2/3. Now, there were roughly 200 companies in the lithium business when the prices peaked, and nearly all of them failed. Very few analysts are predicting another bust, as they're expecting the growth of electric cars will cause lithium demand to triple in the next 5 years, far outpacing the current supply. The lithium prices this year have notched up to their biggest monthly increases ever. They're rising about 33% from the end of 2020. Now, average prices for one battery chemical, being lithium carbonate, have risen to around $9,000 US per metric ton. That was from around $6,000 at the end of 2020, and this is buoyed by Chinese demand. For reference, they peaked at $17,500 in the early 2018. Lithium is an increasingly crucial material central to rechargeable batteries, and that powers cell phones, electric cars or electric vehicles, and the batteries are far becoming a disruptive force that's also used in the energy sector as well. And demand, especially from vehicles, is expected to surge, especially with all the stimulus and announcements coming from both Europe and US and many other developed nations. Controlling the resources that power them is now the 21st century's version of what oil security we saw last century. For now, the US remains highly reliant on China and other countries for their lithium. They've fallen far behind the mining and refining of it, and Australian listed miners in the US are at the leading edge of these efforts to build the American supply chain for highly conductive ultralight metal that is lithium carbonate used within electric vehicles and batteries and the like. Now, only 1% of the global lithium output is both mined and produced in the US. China, on the other hand, has a huge chemical industry and low costs, where they unearth about 10% and they process about 2/3 of what's dug up across the globe. Scientists say that switching from fossil fuels to batteries will be a critical component to reducing carbon dioxide emissions. You can also see other videos that we've produced in the description to have a look at what Microsoft's founder Bill Gates says about green energy, uranium use, and that transition to a greener environment. But he's not the only one that says switching from fossil fuels to batteries will be crucial in reducing the carbon dioxide emissions, the key contributor to climate change. Although it really is a messy process. Increasing domestic production of lithium in the United States is vital for the US to support their auto industry and to meet its climate goals. President Biden signed an executive order in late February 2021 calling for a review of the supply chain for critical materials, including those needed for electric cars, such as lithium. Government had said that relying on overseas sources for these materials creates what they call a strategic vulnerability to the US economy. Although the lithium deposits that can be found all over the world, it's difficult to turn them into the chemicals that power batteries, because the refining of the metal involves large amounts of equipment and intricate chemical processes that can cause water and soil pollution without the proper controls in place. For most, it takes 5 or more years for a new lithium mining operation to produce battery-grade materials. Australia was the largest lithium producer last year in 2020, with nearly 140,000 metric tonnes, according to the benchmark Mineral Intelligence, which tracks products in line with lithium-ion battery supply chains. Chile was the second biggest with almost 100,000 tonnes, followed by China at 35,000 tonnes. For comparison, the US produced roughly 3,000 tonnes, but has among the largest resources in the world, according to US geological surveys. The trouble is that in today's prices of lithium, much of that American lithium is far too expensive to pull out of the ground, or uneconomical. So most of that lithium mined in the world today comes from 2 sources. A salty brine that's pumped out of the ground in countries such as Chile. There's also spodumene, the mineral contained in the hard rocks found in places like Australia and North Carolina within the United States. Processing plants, which can cost several $100 million, are about half as expensive when they're built inside of China. because China has looser environmental regulations for mining and chemical processing that in much of the Western world are at higher standards and degrees of protection. With an understanding of the fundamentals behind the lithium carbonate and lithium mining, we move over to have a look at the top miners or companies exposed to lithium mining on the ASX. At number 6, we've got Liontown Resources LTR. They're up 3% for the month. Now, the company has announced an internal mining executive, Tony Ottaviano, the Chief Executive and Managing Director, to start in May 2021 to oversee the company's next critical growth phase as it embarks on financing and developing of a new next-generation Australian lithium mine in its Tier 1 Kathleen Valium lithium tantalum project in Western Australia. JDR is number 5, Jadar Resources 8.4%. Number 4 is Lake Resources, a very popular trading company on the ASX, is up 10.7%. And it's lean lithium developers utilising direct extraction methods and has a lot of investors trading that company. Number 3, we see Mineral Resources, MIN is a ticker, 12%, somewhat exposed to the lithium process. Now we see Piedmont Lithium, PLL is a ticker, 24%. Now the news coming out has been quite significant, and we have seen articles from the Wall Street Journal write up this company talking about investors, how and what's going on in the North Carolina region that Piedmont is from. So the Wall Street Journal reported that most miners in North Carolina's Piedmont region are part of that next generation technology that is a part of a national priority. So they're looking to launch in Piedmont, one of the first new lithium mines in the US for decades. In the US, this follows their World War II history, which is where their modern lithium mining industry started. So that North Carolina region was known in the 1950s for the metal that was used to make components of nuclear bombs. And it's one of the world's biggest lithium producers was Albemarle Corp, which is based in nearby Charlotte. Nearly all of its lithium mined today, however, is extracted from Australia and Chile, which have large accessible deposits of the metal. Piedmont is still about 2 years away from pulling lithium out of the ground in North Carolina, but last September it announced a deal to supply lithium to Tesla, and once its mine comes into operation, the company plans to spend more than $500 million to build a pair of its plants to extract lithium. Piedmont is betting on government support, demand from electric car makers, and a solid supply of raw materials close at hand to make its processing plants more profitable. Now, we've looked at the Tesla supply chain and the importance of having that strong proximity to help these lithium miners have strong returns on the ASX, so you can click in the description to have a look at those companies. But looking back on making that profitable mine, it also has other lithium companies around the area in the United States wagering that the soaring demand from electric vehicles will push up those lithium prices. In contrast, in China, they power many of the plants by coal, whereas Piedmont plans to use solar and natural gas. And like most startup exploration companies, it needs deep pocket investors, partners and cornerstone investors to help develop the mine itself. So that will be a hurdle for Piedmont in the next 2 years. However, they might be one of the few new sources of lithium in the new world if they get enough investment to come to market in the next 2 to 3 years and be one of those first mover advantages on US soil. Once it's operational, Piedmont expects to produce 160,000 tonnes a year of concentrated spodumene. That's yielding 22,700 tonnes of refined material. That could represent several times more output than the current US production, but it's still not nearly enough to meet the expected demand. Moving over to the number one performer for the month is European Metals Holdings EMH, up 21%. The UK and Australian listed mining company had some drilling results about a month ago and have issued shares off the back of it. So they announced that they would issue 7.1 million Australian dollars for $1.10. And this is to fund their Sinovec lithium project that is in the Czech Republic. Now, Thematica Future Mobility, a Luxembourg-based green energy fund specialist in that electric vehicle supply chain, has invested 5 million Australian dollars. And they've said, we see European Metal Holdings that should reach final investment decisions in early 2022, post the completion of definitive feasibility studies, as one of the first producers of battery-grade lithium chemicals on the continent, and given its large resource, a meaningful contributor to the European Raw Material Alliance target. The drilling results were for 12 of the 19 planned holes, and the company said these interim results of the current drilling program in Sinovec are either in line with or better than our expectations, and noting that European Metals holds 49% interest in that Sinovec project. To take a broader perspective, we have a look at their 12-month performances, and we see number 6, Mineral Resources, 111%, Jadar Resources JDR 121%, Liontown Resources LTR 165%, European Metal Holdings EMH 187%, Piedmont Lithium PLL 229%, and Lake Resources is still the leader, LKE's ticker 237% for the year. We'd like to thank Scott Patterson and Amit Rakumra from the Wall Street Journal for solid research and trading economics for their price data, as well as Bloomberg for this exceptional footage.